Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa. Closing markets for the week ending April 29th, 2016. April ended up being a very interesting month. Keep in mind, a month ago, as far as the grain trade's concerned, we came in with concerns about 94 million planted acres of corn, very little change on bean acreage, supply talk that was burdensome. Here we are 4 weeks later with arguably, and we'll find out come Monday on the planning report, give or take 50% of the corn crop in the ground and very little conversation about supply. Now in the meantime, we've seen a build in demand, worth noting, especially in the export side. But while I'm thinking about it, it's interesting to look because of the influx of money that we have seen in these markets in the last 30 days. And I'll get to that in a second. But if you look at corn for the month of April, corn was up nearly 10.5% on the month. Beans up 12%. Wheat only up 1%. Gold was up about 3 to 4% for the month. Cattle was actually the negative. Cattle was down over 7.5% on the month. Crude oil up 16% for the month of April. And when you look at a CRB index, which is a combination of commodities, was up about 7.5% for the month of April. If you look at that on an equivalent yearly return basis, that's nearly 90%. So a lot of the investment money that's come into commodities in the last 30 days, to some extent the last 60 days, have seen very prevalent returns in the commodity business. I was just watching CNBC here this afternoon, and there was a fair amount of conversation about the rise in the commodity boom, and mainly in their case they were focusing on crude and gold, but in the financial world, commodities seem to be kind of the sexy play again. Now the driver of that, if you step back and look in the last 30 days and almost on a day-to-day basis, is the pressure and the slow downward we've seen on the U.S. dollar index over the last month, and more specifically since the first of the year. Since the first of the year, the dollar index is down almost 5 points, and currently the U.S. dollar index is trading at or near 18-month lows that we've seen over the last year and a half. So the reverse correlation with a weak dollar causing high commodities seems to be the driving force in this market. Again, when I mentioned crude oil's up 16%, we know there's a big supply. The stocks numbers report that every week. But rig counts since 2009 are the lowest, since 2009. We're at about 332 currently. It was only about 2 years ago the rig count was 1,600. So from a future supply standpoint, those are the kind of things people are looking at. Get to the grains, you're seeing improving export sales, especially on the corn market. This week was the best weekly export sales on corn in about 15 months. And it's nice we're seeing more traditional buyers, Japan, South Korea, Taiwan, good buyers again this week. Corn exports have been solid the last several weeks, and you have to attribute some of that with some of the logistical problems in South America, but also again getting back to the weaker dollar. Now the Commitment to Traders report came out this afternoon, and it does show managed money or funds long almost 80,000 contracts of corn. My guess is that's higher than what the trade was anticipating. That's a change of 111,000 contracts last month. Wheat is still, the funds are still short about 60,000 contracts of wheat, and the funds are long, still long a fair amount, 160,000 contracts of beans. So it'll be interesting to see this fund activity going forward into the month of April. Coming up, you have obviously the month of May. We'll continue to watch planted acreage progress. Again, the trade's looking for about 50% this upcoming week. We're off to a very good start in most areas of the Midwest. And you just continue to watch movement in the cash markets. Basis has weakened, obviously, in the month of April with these higher markets. In many cases, the basis has backed off. In the exception, maybe export business for the corn on the export channels along the river and possibly out to the west coast. But we continue to see very large basis differentials from the western corn belt to the eastern corn belt. Obviously, the western corn belt had bigger supplies of corn this year than the east, excess supplies. So the basis differential on corn, say from a processor in Nebraska versus a processor in Indiana, could run 30 to 50 cents a bushel currently. And in soybeans, that same window is about 65 cents. So obviously the east is a little tighter on stocks. We're not as abundant. And as we approach the summer months, it'll also be interesting to see how demand continues and also how logistics take care to handle that. There's still a lot of on-farm bushels, especially in the western corn belt, that need to move. 4 weeks ago, if anybody said we're going to see $4 type corn and $10 type beans, I don't think most people would have argued with those values. But more times than not, they would have assumed those would be in the June-July time frame when we're more in the weather area. Keep in mind, East corn has traded above $4 last week. A total of about 13 hours. 11 of those hours were in the overnight trade. So that will be a little bit of a psychological barrier, so continue to watch that. A lot continues. Volatility's picked up. Option volatility and premiums have picked up. And if you'd like to visit about some ways of protecting some of your old crop, some of your new crop, please feel free to call us here at the office. With that, it's been Clark Neighbors with BIS Commodities. And with that, everyone have a very nice weekend.